What if you could predict the next big move in pound sterling to US dollar before it even happens? In this video, I'll break down the market using ICT and Smart Money Concepts, combine multi-timeframe technicals with key fundamental data, and show you exactly where to place your buy orders with confidence. Daily Trend and Fair Value Gap. Daily Trend and Fair Value Gap using the most recent historical data up to May 20th, 2025. 1. Bullish market structure. Since March, pound sterling to US dollar has forged a clear uptrend, consistently producing higher highs and higher lows. As of mid-May, the pair even rallied to a fresh 4-month high, underscoring persistent buyer control on the daily chart. 2. Refined fair value gap imbalance. A rapid sell-off in early April left an imbalanced zone, or fair value gap, between 1.2976 and 1.3017, where trading volume was thin as price fell through that range. Institutions often skip filling orders here, making it a magnet for future retracements. 3. Overlap with daily order block. That same 1.2976 to 1.3017 area coincides with the last significant bearish daily order block. Smart money traders who sold earlier are likely to return here to rebalance, turning it into a dual supply and demand reference zone. As long as daily price holds above 1.2976, the bullish trend remains intact. Every dip into 1.2976 to 1.3017 offers a lower risk by the dip opportunity, aligning your entries with where institutional orders are most concentrated. H4 confluence zone. Breakout above the 2024 high. On April 29th, pound sterling to US dollar surged above its previous 2024 peak, 1.3433, printing a H4 high of 1.3442 before stalling. Retracement into 1.3290 to 1.3330. After the spike, the pair pulled back into the 1.3290 to 1.3330 region, earlier swing high resistance that has now flipped into a demand zone on H4. Mini liquidity grab. Within that zone, price briefly dipped toward 1.3270, snapping stops and drawing in liquidity before rebounding sharply. That stop hunt is a classic smart money liquidity grab. 1.3290 to 1.3330 is the refined H4 confluence area, where the breakout turns support, order block demand, and minor imbalance coincide. Watch for bullish retests here, e.g., clean order block touches or rejection candlesticks, to enter long with a tight stop. H1 precision entry. Zoom into the H4 zone for finer detail. The H1 bullish order block is at 1.3345 to 1.3355, created by a strong green candle on May 20th. Entry techniques. 1. Place a buy limit at 1.3350. 2. Or wait for a pin bar rejection in 1.3345 to 1.3360. Refining your entry on the H1 chart keeps your risk tight and reward high. Fundamental and sentiment confirmation. CFTC Commitment of Traders, COT, report. As of the May 16, 2025 weekly CFTC report, leveraged funds, the large speculators category, held a net long position of 27.2K contracts in British pound futures. This level sits near a multi-month high and signals that institutional players remain bullish on GBP, adding weight to any technical buy-on-dip strategy. FedWatch tool probabilities. May FOMC meeting. According to the CME FedWatch tool, traders assign a 94.3% probability that the Fed will hold its target rate steady at 4.25 to 4.50% in May. Such no change, odds reflect the Fed's cautious stance amid still elevated inflation. June FOMC meeting. For the June gathering, the same tool shows a 66.7% chance of a 25 BP rate cut, with the market bracing for the start of an easing cycle next month. Anticipated Fed easing further undermines the USD and supports pound sterling to US dollar upside. US Dollar Index, DXY. On May 20th, the DXY closed at 100.13, down 0.29% on the day, and roughly 1.8% below its early May peak of 101.98. The recent decline in DXY underscores broad USD weakness, creating tailwinds for pound sterling to US dollar rallies. Euro to US dollar correlation. Also on May 20th, Euro to US dollar closed at 1.1271, plus 0.27% for the day, a clear sign of risk-on flows into higher beta currencies. Since Euro to US dollar and pound sterling to US dollar have a historical correlation of around plus 0.9, Euro strength often presages further GBP gains. Bringing it all together. Institutional positioning. COT large speculators are heavily net long GBP. Fed outlook. FedWatch high odds of a May hold and a June cut. USD under pressure. Intermarket signals. DXY down. Euro to US dollar up. Environment is green light for pound sterling to US dollar. All these factors reinforce the technical bias to buy pound sterling to US dollar dips around your identified confluence zones, knowing the fundamental backdrop is firmly supportive. Risk management and timing. Stop loss, 1.3300, 50 pips below entry, just under the H4 demand zone and recent swing low. Take profit, 1.3450, May high, for conservative target, 1.3600 if the rally has strong momentum. Risk, reward, 1, 2. Best execution. Times, London Open, 07:00, 09:00 GMT +1, and London/New York overlap, 12:00, 16:00 GMT +1, for maximum liquidity.